Hey, we're going to get rolling here today, and just like that end of June report, put some pressure on the corn market. We're getting that again in here today. But let's just get to this report quick. When you look at this thing and take a step back, we just go right to the ending carryouts, and we're not going to nitpick on these numbers. But as you can see in front of us right now, the ending carryout levels, what the USDA put out here today, of 1.47 billion bushels on corn, 230 million on soybeans, and 639 on wheat. We're pretty close to the estimates in here. They were all just a shade higher in here, but really not a big deal, okay? And as a whole, wouldn't be market moving unless you had weather in the outside markets. As you get to the world numbers right now, there's something both for the bulls and the bears. The bulls in the market want to sit here and go, hey, look at bean ending carryout, drop back below 100 million metric ton and didn't get much of a jump up in wheat. And the corn, though, the carryout jumped up closer to 313 million metric ton with a higher increase here in the U.S. So you could argue corn a little bit more negative here, but should give some support, to the bean side of it. We just want to take a step back now and take a look at the charts. Last week we had that big break on corn where we went down to the 566 area, and we want to put a simple retracement on here from the low, last week's low, to the contract highs. And that really shows us that we should get corn to bounce back into the 640 to the 690 range. And we did get above 650 yesterday. To get a major push above 690, we probably need some major weather issues to show up. As we look at the bean chart, and again, just like corn, we think last week's lows are going to hold in that $13 area. And if we look for a retracement, we're looking at 1410 to 1475, 1480. With beans, we think there's probably a little more support or a little more upside potential than corn, just from the standpoint of weather uncertainty, that we're seeing, especially as we move towards the end of July and August. As I get to the wheat side of it, we're just going to bring KC wheat chart in front of us, as we think that's one with the most supportive fundamentals in here, especially with the poor hard red winter wheat crop. Again, we look for this 830 area. Maybe we can take that out, head below $8 to hold, or head down to $8, that would hold. And if we're looking for a bounce back, we still think 10 to 1050, 1075 is a realistic upside target. If we get to the wheat market, that could be a little more negative. You got to go over to Minneapolis wheat, as that crop size is growing, crop ratings improved, and you're probably going to see not only a larger crop here in the U.S. for spring wheat, but probably going to also occur for Canada as well. And so if there's a market where you're going to say we're vulnerable on taking out the support down at 870, you're going to have to point to Minneapolis wheat. Again, though, we expect high volatility, but to get a sustained move above 1075, 11 or 11 and a quarter on September Minneapolis wheat, the weather's really got to change more for the negative. One thing where wheat can find some support, though, is that we're starting to become a little more competitive on the world market. But it seems like world buyers are bought up right now, and there's still so much uncertainty regarding what's available out of Russia and Ukraine. As we want to wrap up today, we think a big reason why we got these grain markets lower is the crude oil market was down sharply. I have down $7 right here, but before I walked in, it was down a little bit more than $8. The other thing that's overhanging this market is concerns about the economy, higher interest rates, and is inflation going to get under control or not? I think when you get to the wheat market, it's really important to look at classes of wheat. Soft red winter wheat ending carryout, and you can even add spring wheat carryout levels are increasing, while KC wheat or hard red winter wheat is decreasing. As we get to corn and soybeans, we just think that we're probably establishing more of a range in here. Don't get too bearish on big down days in the market. On the other hand, we probably shouldn't get too bullish on big up days in the market as well. I think it's going to be tough for corn to get a sustained move back above $7 in here. If we're looking at a range on corn, 550, 650, 575, 675, somewhere in there. We didn't get any changes on the yield side of it in today's report, but I think it's important to recognize that the USDA has the bean yield at trend at 51.5, but the corn yield is currently below trend at 177. Our point is this: if the USDA is correct on the bean yield at 51.5, the corn yield is probably a little bit too low. On the other hand, though, if the corn yield is correct at 177, we got to bring this bean yield down a little bit. And when you have ending carryout already closer to 200 million bushels, every time you drop a bushel an acre off of the bean yield, we're dropping almost 80 million bushels. So, that's one thing where it could swing the bean side of it a little bit more positive. Again, as we look ahead, it's all about weather in here right now moving forward. I mean, yesterday's midday models pointed a little more precip in the forecast. We broke back. Today's midday models still have some precip as we head into the weekend, especially for the eastern corn belt. The 2 to 3 week forecasts are trending a little bit drier. We expect this high volatility to continue, not only today, not only the rest of this week, but the rest of the summer as well. It's extremely challenging in here to manage risk. That's where we think making small cash sales on rallies for producers and end users, if you'd like your margins and want to buy some grain, buy some ahead on these large breaks. We'll bring you our daily advisory report. Any questions, give us a ring or drop us an email. We'll see you next week. Have a great day.